Hello traders, Gary Wagner here. It is 11:45 in Honolulu, 5:45 in New York on Friday. Happy Aloha Friday, as we say on the islands. 22nd day of September 2023, and this is the daily report for gold and silver, our weekend review. Gold futures recovered slightly, gaining $6 in trading today, 0.31%, taking the most active December contract to $1,945.60. However, when we convert our daily to a weekly chart, what you will get in terms of a candlestick type is a pure doji. A pure doji occurs when the open on Monday is identical to the closing price on Friday. And that's exactly what we got. It is not even a tick away in terms of the open to the close. Typically, a doji, when found after a defined uptrend or downtrend, can signal the potential for a pivot from bullish to bearish or bearish to bullish, or, as I more likely suspect, in the case of this weekly charts doji, simply a consolidation as market participants wait to see if legislation is passed next week to fund the government. We can derive a couple things when we look at a daily candlestick chart. The first thing is that we had a tremendous price decline that occurred at the beginning of Chairman Powell's press conference, and over the next 24 hours would take gold to the intraday low of approximately $1,933. However, on our daily chart, we closed out at $1,967 only because New York closed and Globex opened once the sell-off occurred. You can see that when we convert this to a 4-hour chart, and this is the kind of price decline we saw in Globex on Wednesday, with the following day capping the $27 price decline we saw by the close of markets on Thursday. The most substantial information we can derive from the daily chart is by looking at the real bodies and the Fibonacci retracement of this short data set that began in the middle of August and concluded on the first day of September when gold hit approximately $1,980, and that is that the real bodies both yesterday and today occur above the 61.8% Fibonacci retracement, indicating a potential level of support. That being said, I also believe that the key takeaway of this week's action by the Federal Reserve is that it is fundamentals that lead the way in terms of price direction, which is why the direction of gold next week will be largely shaped by Congress as to whether or not they are able to pass legislation to fund the government. We are looking at a daily chart of silver futures. This bases the most active December contract. We can see that we did not see the strong price decline that we did see in gold, but a small move to the upside in terms of the open to closing price, as well as the closing price compared to the prior day. This morning, we did send out a trade alert to raise stops. This is for our subscribers that are active silver traders. When we convert the silver chart from Japanese candlesticks to a Japanese Henkinashi chart or average chart, we can see that there is still the opportunity, according to this chart, that we will see silver continue to move higher. When we convert that into a 3-line break chart, another type of Japanese chart style, we can see that this also indicates a strong pivot or bias to the upside. Maintain your current long position as well as your stop once you have raised it. Lastly, a look at the dollar and its relationship to both gold and silver, because there is a 100% negative correlation between upside moves in the dollar and upside moves in silver or gold, because both precious metals are paired against it in terms of pricing. The dollar rose to its highest value since the highs achieved back in March of this year. The highs achieved today, as well as the closing price of the dollar index, really match the closing prices that occurred at the end of February. And if this is taken out and not a level of technical resistance, we could see the dollar continue its upward move, not finding resistance till approximately 105.60. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Have a great weekend. Bye-bye.